Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, March 31st, 2011, the last day of the first quarter. It's 11:30 a.m. Eastern Time in the U.S., 4:30 p.m. in London, 12:30 in Hamilton, and 10:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We have a breaking story that literally came out about 5 minutes ago. American International Group has announced that it has reorganized its property and casualty insurer Chartis. They've broken the company into two major global groups, one dealing with commercial and the other with consumer. Peter Hancock has been appointed the CEO. The company will consist now of two major groups, commercial and consumer, with the supporting claims, actuarial, and underwriting disciplines integrated into these two businesses. The company will further be broken into four principal regions: U.S. and Canada, Europe, the Far East, and growth economies. People had been suspecting something like this because Chartis had set aside $4.2 billion for loss increases just last month. So finally the other shoe has dropped here. So we'll see what happens with this. Well, to our main story. This is really a surprise. David Sokol, who had been one of the people talked about to replace none other than Warren Buffett, has resigned from the firm. In a statement explaining Sokol's departure, Mr. Buffett mentioned last night that Sokol had purchased shares in the chemical company Lubrizol before he suggested to Buffett that Buffett should purchase the firm. Berkshire announced on March 14th that it would be buying Lubrizol. However, Buffett pointed out in his statement that Sokol had bought the Lubrizol shares without knowledge of how Buffett would react to the suggestion, or how Lubrizol would react if Buffett tried to buy the company. Buffett said, "Neither Dave nor I feel his Lubrizol purchases were in any way unlawful." Buffett said he's told me that they were not a factor in his decision to resign. In a letter to Buffett, Sokol said that he resigned because he wanted to use the time remaining in his career to focus on creating wealth for his family and philanthropic interests. Sokol was chairman of Berkshire subsidiaries Mid-American Holding Company and Johns Manville, and chairman and CEO of NetJets. So that group at the top gets smaller. It's Ajit and the new fellow, the young fellow they brought in to manage the some of the portfolio, whose name is escaping me for a second. Well, Insurance Insider's sister publication Trading Risk is announcing now that the Muteki cat bond, Munich Re's $300 million cat bond for the Japanese agri-carrier Zenkorian, has been triggered by the March 11th quake. According to the sources, the index value for the event, based on readings from the Kyosho network stations, the KNet stations, has finally come in, and this in fact has triggered the parametric trigger that pays out on index figures linked to the size and location of the quake. This is a $300 million cat bond. It's a transaction from Munich Re. It's called Muteki Limited. It was issued in 2008 on behalf of Zenkorian, which is the National Mutual Insurance Federation of Agricultural Cooperatives of Japan. This is now, according to Trading Risk, it has officially been triggered. So we'll see how it's doing. Just before this news came out, Muteki was trading at 45% of its face value. Investors were willing to buy at a bid of 45 cents on the dollar. So it definitely had taken a hit. Platinum Underwriters said last week, of course, that it expected its cat bond, Topiary Capital, to be triggered. That would see Platinum seeing about $200 million of reinsurance protection. Meanwhile, back in Japan, the Japanese government has said no to the UN suggestion that the Japanese consider widening the evacuation zone around the Fukushima nuclear plant. The International Atomic Energy Agency said this morning that radiation measured at a village about 52 miles from the Fukushima reactor exceeded a criterion for evacuation. Radioactivity in the seawater has reached more than 4,000 times its legal limit, according to the IAEA's Deputy Director General, we've advised the Japanese to carefully assess the situation, and they've indicated it's already under assessment, but they did say no. Concerns over radiation continued to spread beyond Japan after Singapore detected radiation 9 times the limit in cabbages imported from Japan, while in the U.S., small levels of radiation were discovered in milk samples on the western coast. 130,000 people who live in a 10-kilometer band beyond the exclusion zone have now been either told to leave or to stay inside. There's a report running on Fox Business News that the so-called Fukushima 50, who are the heroic workers who are been battling the radiation fires in the plant since March 11th, have told their loved ones by text and telephone that they fully expect to die within the next 2 or 3 weeks of radiation poisoning or some fast-moving cancer caused by the radiation. Well, Willis is coming out with more news. They're at a conference and making news themselves. They say that relatively orderly price movements at the April 1 renewals, the Japanese reinsurance renewals, have begun to indicate that the March 11th quake is not, repeat, not the catalyst that will bring about a hard market. However, Willis said that the total tally of first quarter devastation, including the Japan quake, the Chilean earthquake of last year, the New Zealand earthquake in February, and the Australian floods, has significantly accelerated the likelihood of a market-wide turn should reinsurers be tested again this year. Their report that they came out with that they're discussing is called Shaken and Stirring, which of course is a play on the James Bond Very Dry Martini. The report said that while there have been rate increases since the Tokyo and Christchurch earthquake, those by themselves are not sufficient to drive up the market. According to the report, to trigger a hard market, there needs to be an additional accelerant, which could be another major natural cat loss. It could be inflation. It could be the reversal of back-year reserve releases, or it could be the development of wider financial issues impacting investment income. Peter Hearn, chairman of Willis, said, "The reinsurance industry is on the cusp of change, and a hard market may be only one more major event away. It could be something as dramatic as a catastrophic hurricane during the upcoming North Atlantic and European winter windstorm seasons, or something more like systemic creeping inflation. But whatever the reasons, reinsurers have proved their resilience and are gearing up for a bumpy ride over the remaining months of this year." You can almost hear the trumpets and glee in that report. Zurich Financial Services expects to reveal a hit of $500 million U.S. from catastrophes across the Asia-Pacific region when it reports its Q1 results on May 5th. The 5 events included within the loss figure are the Brisbane floods, the Victoria storm, Cyclone Yasi in Australia, the February 22nd New Zealand Christchurch earthquake, and the March 11th quake in Japan. The $500 million U.S. estimate is pre-tax and net of reinsurance. Here's a big business interruption claim. This is contingent business interruption claim. It's coming to a theater near you. Toyota said today that they may delay the production of at least 500,000 cars in Japan because of a shortage of parts and electricity after the earthquake. This is according to an analyst at Advanced Research Japan. Toyota's operating profit might be hurt by at least $1.2 billion in the fiscal year ending today and up to $2.5 billion next year. Any impact on production that spills to its production facilities overseas will only further reduce earnings. Toyota said the company lost 140,000 units of production from March 14th to the 26th, citing a shortage of electronic parts, rubber, and plastics. Hardly any cars, said the analyst, will be built in April, and a very low level of production will continue from May. Japanese manufacturers also face a cut in the summer power supply of about 15%. This is after the earthquake knocked out generators. What a mess. It's more and more bad news. It just doesn't stop from Japan. Stock market in the U.S. is down about 3 points right now. We'll go to a word from our sponsors. was a big blow down in Mississippi yesterday. Winds that reached speeds of 110 miles per hour in central Mississippi damaged more than 40 homes. Severe storms dumped large hail and heavy rain flooded roads. There were no immediate reports of injuries. A line of severe thunderstorms was sweeping across the southeastern U.S., and there was a report of a tornado and several suspected tornadoes in Florida, but no reports of any damage or injuries. Our friend Toby Esser at Cooper Gay was in the news. Cooper Gay, Sweat & Crawford produced underlying earnings of $68 million U.S. last year and commissions of $340 million. Net cash earnings were $31 million. The results were the first ones of the combined group of Cooper Gay and Sweat & Crawford. Cooper Gay, of course, bought Sweat & Crawford last year to become one of the largest wholesale brokers in the world. Esser said, after the landmark combination of the two companies in 2010, our inaugural results clearly demonstrate our excellent trading position. The group has produced a turnover of $340 million with underlying EBITDA of $68 million and strong operating cash flow. Good for him. Here's an interesting story. Italian insurer Generali is going to hold an extraordinary board meeting on April 6th. It's going to address a growing fight between some of its directors. Tensions on the company's board came to a head after one of Generali's three vice chairmen, Vincent Bolloré, a French businessman, refused to approve Generali's 2010 accounts. And then he expressed doubts about the company's strategy in Eastern Europe, specifically an agreement signed in 2007 with the Czech group PFF. PFF is owned by a billionaire, Peter Kellner. Mr. Bolloré said that the agreement was not balanced, and he asked for greater transparency. His public comments then triggered a request by Italy's financial markets regulator for more information about the deal. Generali insisted that it's provided no guarantees to Kellner, despite some reports in the press. So the group's chairman, Cesare Girondi, who was apparently also at odds with the company's CEO, Giovanni Perissinotto, decided to call an extraordinary meeting to attempt to appease the situation ahead of the general shareholder meeting on April 30th. Boy, I'd like to be a fly on the wall in that meeting. The number of American workers filing new claims for unemployment benefits fell last week. It indicates that the American job market continues to gradually recover. Initial jobless claims fell by 6,000 to a seasonally adjusted 388,000. Analysts had been expecting a drop of 2,000. And in Libya, the foreign minister has defected. Musa Kusa resigned his position and took a private jet to the United Kingdom, and he's in hiding there. He's talking voluntarily to British authorities. He's staying in a safe house. The resignation, according to British Foreign Minister William Hague, says that the Gaddafi regime is fragmented, under pressure, and crumbling from within. It was revealed today and confirmed that the CIA has already sent a small covert team into rebel-held eastern Libya. The operatives are in Libya to gather intelligence to help direct NATO airstrikes as well as to train rebel fighters. The battle in Libya keeps seesawing. As of today, the rebels seem to have lost about 80 or 90 miles to Gaddafi's forces. It's becoming increasingly clear to NATO allies that what might have to happen is some training of the Libyan rebels, or God forbid, some actually active intervention. So we'll see what happens there. Meanwhile, off the coast of California, the U.S. West Coast, 10 sailors were injured when a Navy jet caught fire as the pilot was preparing to take off on the U.S. nuclear aircraft carrier John C. Stennis. Here's a picture of the Stennis. It's one of the newer ships. A naval spokesman said none of the injuries were life-threatening, but 4 sailors were flown to a naval hospital in San Diego. The pilot was unharmed. He was alone in his F-18 Hornet when the incident occurred this morning, about 100 miles offshore from San Diego. The injured sailors were working on the flight deck as the engine blew out as the pilot was getting ready to take off. It's a dangerous business, as Fred Thompson said about aircraft carriers in that movie Top Gun. No, that wasn't Top Gun. That was one of the Tom Clancy movies. If we have any breaking news, we'll come back and tell you. In the meantime, we'll keep watching it. If not, we'll see you tomorrow. Thank you for watching.